Hi everyone, my name is Piterpakulski. Today we'll continue building financial model of a brick factory from scratch. And today we'll be talking about purchase intervals for different components which we use in production process. So we already created the algorithm for an offset of purchase. So for example, if we need something in this month, we are able to, and we are purchasing this 1 month earlier, so we just created the algorithm for that. But now, for example, let's assume that we buy some components once a month, some of them once in 2 months, some of them we buy once in 3 months, or half a year, or once a year. So we have to create the algorithm for that, because this will also affect the amount of financing which we need to start this business. So let's introduce a new parameter. So I will just add it here, purchase beforehand, and we will use purchase parameters. I will just change the name of this table. So the parameter will be purchase cycle. We'll be using from 1 to 12. Now, sorry, go back to our input table. Use
data validation, list,
then I will use this data as a list. So this is the input.
this is the input. I mark it with blue color, which goes with all of our inputs.
So for example, this component we will buy once a month. This will be purchased once in 2 months, in 3 months, once in 3 months, once in 4, in 5, in 6, in 7, 8, 9, 11, 12. For example, this will be bought once a year. I'll just copy this story. And now we have to create the table for the cycles, purchase cycles. I will just copy this table. Purchase cycles. This will be like this. I will start writing formula for January. For January will be one formula, and for February and the other months will be another formula. So if this cell is more than 0, then we place 1, otherwise 0. So this will be the formula for January. Now we are writing formula for the other months. We will use if and then function. If this one equals to 0, and this one equals to 0, then we place 0. Otherwise, the next The next case, if this one is more than 0, then we place 1. Then if and this one more than 0 and this one is less than this value, we are freezing column. Then we take this one, cell plus 1. Otherwise we are starting the next cycle. I'm extrapolating formula to the bottom and to the right.
So here we can see the cycles. Now we have to calculate the amount of purchase depending on the interval that inside which we are purchasing this or that component.
So I'm just copying this table purchase amount preliminary. So this is not the final table for that. So what will be the formula? If this is equals to 0, then 0. Otherwise, if this equals to this one equals to 1, then we will take, so this is the cycle, but we need the table that is a little bit higher, this table. If this one equals to 1, then we take this value. If this value is equals to 2, so the period will be, so we are buying for 2 months ahead, so I will add this value here. So we are buying in January, for the period of January plus February. Then if the period equals to 3, we are buying for the 3 months period ahead. Or this will be 5. Then 6. 7, 7, 8, 8, 9, 9, 10, 10, 11, 11, 11, and this will be 12, 12, 12, otherwise 0. Now we're closing brackets. Now we are extrapolating this formula to the bottom and to the right.
And now we will build the final table for direct costs.
So now we need to find, so we will take not all of these values, but only the values at the beginning of each cycle. So we'll take all of these values. Here we will take only this value, this value, this value. For this component, we will take this value, and so on. Where we have 1. We won't pull any other values. So how this will work? If this value equals to 1, then we will take this value, otherwise 0. Now we'll just extrapolate this formula to the bottom. And to the right.
Here you can see we will crop this area. We don't need this anymore.
We needed this area because if we buy something here for the period of 1, 2, or 3 months ahead, we will need to calculate these values. That's why we had some period to calculate these values at the last month of the horizon correctly. So what we have, so for example, we can build some assumptions, and I will show you how this story works. Data group So these are the direct final version of direct expenses. We mark it with red because they will go to the cash flow statements. This is the first final numbers that will affect the cash flow statement. These are the expenses, that's why we mark them with red. And what is valuable about this story? For example, we start operating activity as here in November. We say that
These items
don't have displacement. For example, we purchase every component each month, so the period is 1 month. We can go here, November, there is no displacement. These components we do have displacement. Then, for example, these components are bought once in quarter. These components bought once in 6 months, for example. This one bought just once a year. This component bought, for example, once in 2 months. So our algorithm will be like this. And we can go back, and here we can see, so this one has no offset to the right, to the left, but we have the cycle of 3 months. 1 2 3 1 2 3 1 2 3. Some of here we have displacement, and the interval of purchase this component is like this. These positions, these components are bought once a year. These components bought each month. So here we can specify why we need this. We need this mainly because of the first month of operating activity, to calculate the amount of financing
during the start of operating activity.
So if we during the first month we have to purchase a lot of components for the whole year, for half a year, for a quarter period, for several months period. So we have to invest our resources not only on equipment, on construction works, but also we need some huge amount of money to invest in buying of different components for the brick production. So, and using these tables of inputs, we can specify whether we have or whether we don't have displays of purchase of components to the left, and what is the interval of purchase of this or that component, so we could more accurately see the financial capacity of your business idea to play with these numbers. So this will make you feel more comfortable about your business idea, its strengths, its weaknesses. So I hope you enjoyed this video. You may give us a like, so you may subscribe our channel, share this video with your friends. Also, you can order a financial model from scratch for your unique business idea. We can help you with that. So see you guys in next videos. Thank you and bye.